G'day folks, welcome to this weekly update for the 22nd of April and the start of the Easter break. We had a very strong finish to the week in both the US and Australia, and also in commodities markets. In fact, remarkably strong, considering that from Wednesday onwards you would normally expect markets to start to wind down and traders to pretty much liquidate most of their positions for the long break. But it was anything but that, and we saw some very impressive performances over the last couple of days. So just a reminder, this is general advice only. You need to make your own assessments on which trades that you take from this information. So let's have a look at the action from Thursday night in the US. The S&P moved higher again. That should say Thursday night. And following a retracement to the 38.2% level, and we'll have a look at the charts in a minute. We've recovered very strongly, back very close to the all-time, not the all-time highs, but the highs from a few months ago, and it's looking like it'll break out fairly soon to me. The US dollar had an absolute shocker of a week. The Fed appears to be hell-bent on trashing the dollar to help them deal with their debt repayments. So that meant that the Australian dollar moved up very strongly and finished the week at 107.3. So it's gone up about 4 or 5 cents just in the last few days, and I believe it's pretty much a given that it's headed for $1.10 in the very short term, and probably heading for $1.20 in the medium term. The Aussie indices should continue to push higher from here, but as we've seen over the last year or so, they continue to lag behind the US. But whilst the major Aussie indexes are lagging because there's just no real support for the large cap stocks, certainly the small cap index is back trading close to its all-time highs. So that's where the money continues to be available in the smaller stocks. Gold broke through $1,500 an ounce through the week and closed at $1,503, so a new all-time high on gold. But gold is underperforming drastically at the rate of about 3 to 1 compared to silver, which hit $46.50 overnight and is just absolutely rocketing ahead. Copper moved nicely higher again on Thursday night, back to the 443 type area, so back into the mid-range. And oil also finished higher for the week, with Brent crude finishing at around about $124 a barrel. And the Small Ordinaries Index recovered most of the correction losses that we saw a couple of weeks ago, and has had 2 very impressive days. So let's just have a look at some of those charts first, and we'll come back and look at copper soon. So first chart is the US dollar index, and we'll just pan back and take a big picture view here, and you can see that we've broken through. First of all, we broke through this inclined support line, which was in the middle of March, and we've now broken through this bottom here. So to me, we're heading to 71 cents, which is the post-GFC lows. You can see that we basically finished on that support line on Wednesday night, and we broke through it on Thursday night. There was a little bit of a rally off the lows, but to me, the way the Fed actions are going, it's pretty much a given that we'll see the US dollar down at 71, which would certainly see the Australian dollar at 110 or possibly even higher. Let's have a look at the S&P. So this is on a daily chart. S&P has basically formed. We had a first high was at 1344. The second high was at 1340, and we closed last night at 1337. So we've had a nice orderly retracement to the 38.2% level on a closing basis, and to the 50% level on an intraday basis. and have bounced back very strongly. So to come back almost to the highs within 3 days just tells you how much momentum there is behind this market at the moment. We'll have a look at our particular indexes, and you can see here the ASX 200 has rebounded very, very strongly over the last 2 days and has basically recovered about the last 5 days of downside. So very strong there. Looking at the materials index, this is on a daily basis. So materials, as you can see, broke above that support level. Didn't particularly like to see it back down in the range again, which just tells you that there's a comparative level of weakness there. We'll just have a look at this on a weekly view. So weekly view, you can see still a very good uptrend, but I am surprised at the fact that we did break higher and quite convincingly, and then immediately turn around and came back into the range again. So not the best of signs, but on a big picture view, materials still heading higher. Now this is the finance index on a weekly chart basis, and we did have a very strong finish to the week, but still caught within this trading range. So you can't really go into the finance index with any great degree of confidence at the moment. And this is energy, again on a weekly basis. We broke higher above this resistance level, held up there for 3 weeks. We've reversed back to support, but have managed to close the week holding that support. So certainly the energy index is the stronger of the indices. And then this is the Small Ordinaries Index on a daily chart. So we'll just pan back and have a bigger picture look at that. So very strong on a daily chart. We held the 150-day moving average. We did retrace a little bit deeper than I would have expected. Let's have a look at this on a weekly chart. So there's the Small Ordinaries on a weekly, and looking like we're going to push up above the all-time highs. We only need another 100 points or so for it to break higher. And we'll look at gold. So there's gold on a weekly basis, and finished at 1503 for the week. It's overbought on the RSI, but still moving very powerfully. And then finally silver. This is silver on a daily. Let's put it on a weekly chart, and you can see just how powerful this move has been. I would have thought that this move may have corrected a bit, but there's just so much momentum behind this silver trade that it's not really showing any signs of correction at the moment. So we could well be headed towards $50 before it pulls up. So let's have a look at some of the other charts that we normally look at. The copper inventory. Copper inventory still continues to rise, so this is a real mystery for me that the inventory levels are still rising. Nickel is falling, as we'll see in a minute. Now I'm surprised that the copper price has stayed as strong as it is, given that rise in the inventories. But you can see it's just in this trading range, and we've moved back into the top half of that trading range on Thursday night. And here's nickel. The inventory levels continue to decline, and as a consequence the price is holding up pretty well, but it's also in a bit of a sideways pattern as well. We'll look at tin. Continues to power on, traded above $33,000 during the week, so tin remaining extremely strong. So just to summarise the actions that you really should be considering. So from a strategy point of view, we're in year 3 of a bull market, so we do need to take more care now. We are going to see more volatility, and it wouldn't surprise to see a more significant correction start this year. So we just need to bear that in mind. This is not 2009 or 2010 where we can just blast in and every time a little bit of a correction is finished we can just buy anything. We need to be a little bit more cautious than that. So I'm looking to just to ease back exposure a bit and regularly take partial profits once the market's been rising for some time. So let's not go to full exposure when the market is running hard. I think that's a time to take some profits and be prepared to load up immediately following the correction. So really this is a chess game. It's about positioning yourself for the next correction and the next move, because if you can gain a foothold into some of these corrections, you can make 10, 20, 30, 40% very, very quickly in a matter of a couple of days, particularly in the small cap stocks. So we need to be taking much more of a strategic view of things and not just trying to trade up a storm the whole time. Obviously, quality resource projects and emerging projects are still where the money is. Energy remains the strongest sector, so we're going to continue to look for opportunities there. But frankly, in the oil and gas sector, it's rather difficult to find opportunities that are attractive, because the oil majors are very expensive to my mind. They're all trading on price earnings multiples above 20. The smaller oil stocks that are drilling is always much higher risk to me than a minerals project, where they pretty much know what's there, and it's really just a matter of going through the drilling process. So to me, early stage oil stocks are a lot more speculative than early stage mineral stocks once they've started to get some definition to the resource. So really my focus has been and is going to continue to be more perhaps on some of the smaller emerging coal stocks, because there's certainly a tremendous amount of mergers and acquisitions going on in that area. So my emphasis is going to continue to be in those stocks, and we've seen some great moves from some of the coal stocks, starting with Riversdale and recently through to Bandana Energy and a couple of others. So really looking to only probably buy the dips. Might buy the occasional breakout, but it'll want to be a really good one for me, and I'm going to be focused a lot more on the strategy of making sure that we're positioned correctly with the exposure right, rather than scrambling every time a correction comes around. And I think you are going to see much better trading results if we take that approach. So that's it for this week. The members will be getting obviously the chart updates and all the other recommendation report, and so we'll talk again next weekend. Cheers.